yourself as a short-term or a long-term trader? And what advice would you offer to people getting started on the merits of otherwise or each?
I would classify myself as a short-term trader. The merits of that, it all comes down to your personality at the end of the day. I mean, it's possible that you can be more successful being a long-term trader. I think statistically you are more likely to be successful the longer time frame you use. But again, it comes down to your personality type. If you can get it to work as a short-term trader, I think it's possible you can make more money than long-term. But it really comes down to your personality and the amount of time you've got. I mean, if you don't have a lot of time to invest, then you're probably better off being a long-term trader. Because you can, if you ride a trend, that's where you can make some really good money. But again, it comes down to your own personality, and some people prefer short-term trading, such as myself. It just comes down to, if anyone's starting, I would just advise you to experiment with different time frames and see what suits you. But certainly I wouldn't go any less than 5 minutes. I just think, I mean, a lot of people would think a 5-minute chart is just noise, but I think anything less than 5 minutes is definitely noise and not really worth looking at.
Let's start with some of the basics. Time frames do you use to determine where the market stands?
Initially I used the 5-minute chart because I'm only looking for short-term bounces. But to get a bigger picture of the market, I find it's useful to look at the 1 hour, the 4 hour, and then the daily chart. I don't tend to look at anything beyond the daily because that's almost too long term for me. But I find that the 4 hour and the daily do give a very good overall picture of where the market's at.
Okay. And average trade duration and then trading frequency within?
That's a good question. Sometimes the trade can be as short as 10 minutes, sometimes a few hours, and sometimes I'll be more in a swing trade rather than a day trade, where I'll give the trade a bit more time to come good. So, but typical, we're probably looking at about half an hour for a winning trade, and maybe on a good day, 3 winning trades in a day would be good. But any more than that is unlikely, because it's unlikely I'm going to get that set up any more than a handful of times a day. So a lot of it is just looking at the markets, being aware of what they're doing, and that's where smartphones and things come in really handy, because otherwise it just gives you the freedom to be out and about but still keep an eye on the markets. So yeah, probably three or four trades a day, but a lot of it is just monitoring it and waiting for the setup to come. So you do have to be quite patient and disciplined, waiting for what you want to see to happen.
And what should an experienced trader watch when choosing a time frame?
I think an inexperienced trader shouldn't be looking at a time frame of anything less than 5 minutes. Probably you should start with slightly higher time frame, but again, it all depends on what suits you. That is the beauty of trading, in that effectively you can do what suits your personality and what suits your method of trading.
You mentioned a trading plan earlier.
Yes.
So just talk me through a sort of a morning, a day with you then. You get up in the morning, have an orange juice, and what's next? Yeah,
I'll get up in the morning. I'll tend to look at the markets on my iPod Touch, just because, you know, when you clean your teeth or whatever, it can be there on the little, that's how I do. I literally in the bathroom having a shave, waiting for my little signal to come. Because you can't practically be expected to be in front of the screen all the time, which is where, so I basically just get up before the market opens, and then I wouldn't put a trade on before 8 o'clock because the spread on the market is too high before then. I think it's either 5 or 7 points, which is just too high. So I wait until after 8 o'clock, and then I wait till the first signal I get. Sometimes that can be just after 8 o'clock, sometimes it might not be till 10 or 11. So you just have to wait and wait for the signal to come, which I use. And then when I get my signal, I'll take the trade. And then I won't stress out too much about it. I've made my trade and I wait. If it comes good in the next 20 minutes, I'll get my email through saying your trade's been successfully closed, which is good. So that's like, okay, adjust my position size and then wait for the next one, and that's what I do. Sometimes the trade can go against you, in which case I like to give it a longer time to come good. I don't like, because my view is that the more it goes against you, the more likelihood it is it's going to get into a more oversold position, the more chance it's going to rebound, which some people will disagree with, but I can only go on my experience and what works for me.
But so you don't have you don't sit down and think, right, well, what am I going to do today, and actually sort of plan the day as such?
Well, no, every day is pretty much the same, as in I wait for my combination of indicators. I just find it's easier to stick to one process rather than chopping and changing, trying different things. You know, it's taken a long time to find something that works for me, and I don't want to try and reinvent the wheel. I know it works for me, and I'm going to keep doing it, basically.